Calendar spreads can be like a chakravyuh. You can easily enter, but can be quite challenging to manage, expand, adjust, and properly exit. In my previous video, we had discussed important basics of calendar spreads. If you have not seen it, please click on the link on the top and go through it. In this video, we will be talking about how to choose the trade, how to increase the width of the profitable area, few rules and guiding principles for setting up the trade, when to adjust the trade, how to adjust the trade, and when to exit. All those things are really important. And then we will see one backtesting also, complete backtesting, wherein we are able to fulfill our targets or not. So welcome to another video by the Option School. This is your friend Pradeep Singla. I promise that I will be coming up with a video wherein I will show you how to adjust and how to backtest. But the real challenge for me is to find out a setup in which lot of knowledge is not required. So even if you are a fresher who is trying to trade calendar spreads, can there be a calendar spread setup which can be used by a person who is not knowing so many Greeks or so many details? So it took me time. I tested a lot of trades and then I found that this is one setup which can be shared. But again, a disclaimer, this is just for educational purposes, and if you really want to trade calendar spreads, it's always better to take guidance from some experts. So what we are going to see in this video, let us see how to set up the trade. Important is to see how you are setting up the trade, because most of the adjustments are dependent upon whether the trade is set in a right manner or not. So many variations of calendars are possible. There can be slow calendars, there can be fast calendar spreads, there can be ultra fast calendar spreads. Now what are slow calendar spreads? Calendar spreads like which are long duration calendar spreads, something like monthly. Fast calendar spread can be weekly monthly. Ultra fast can be weekly. Ultra fast can be expiry trade calendar spreads. So if you try to trade ultra fast or fast calendar spreads, obviously the skill level, the knowledge level required is very fast, and it is not necessary that they will be more profitable. Even slow calendars have given decent amount of profit. So in this video, I will be starting with a slow calendar spread so that least adjustments are required and still we are able to reach our profit targets. So I have selected a monthly setup. We will be following up with some rules, some basic principles on how to set up the trade. Monthly means basically you are selling a monthly call or put, and then you are buying next month call or put. So this trade is generally initiated 35 to 40 days in advance from expiry. For example, let us say if I'm trying to trade for 31st July expiry, trade can be initiated somewhere on 21st or 24th of June, which is just 30 to 40 days before expiry. So sold options obviously will be for July and purchased options will be for August. So that completes the calendar spread. So this is not necessary that I will be starting the calendar spread from 1st July. I can start it from 5-6 days in advance from the beginning of the month. So it can be done from 21st to 24th of June, depending upon whether right kind of liquidity is available in the chosen strike prices. So that makes it slightly difficult, because if you're doing it 40 days before expiry for August month, like in this example, you definitely need to choose strike prices which are 500 or exactly thousands, like 24,000, 24,500 or 25,000. So the liquidity is available in these kind of expiries. But if you choose something like 24,300, 24,350, liquidity can be an issue and we can lose certain points right in the beginning of the setup. Another thing which we need to ensure that selling premium is at least 50% of buying premium. Now what does this mean? 50% of buying premium. So I will be buying, like if I take this example, I will be buying for August. Let us say whatever I have purchased for August, its value is 500 rupees. So whatever I am selling for July should be more than 250 rupees. So that means it is at least 50% of buying premium. If it is more than 250, it is good. But if it is less than 250, it can be slightly challenging. Let's see now how to set up the trade. Now basically we want the trade to be very wide enough so that even if the market makes a move of 300-400 points in any direction, I am not required to do an adjustment. That is the basic beauty of slow calendar spreads, monthly, so that you set up the trade and then you just wait. In case there is a wild move, yes, we will make an adjustment, but in case there is no big move of the market, I will just take my profit and get out of the trade. So to get the wider range in calendar spread, what we have done a OTM call calendar as well as an OTM put calendar, so it becomes a double calendar. What is the benefit of this double calendar? Benefit of this double calendar is that my profitable zone width becomes very wide. I'm getting a range of, let us say, more than 1500, 1600, 2000 points, within which if market moves, there is not going to be any problem. So when VIX is low, obviously if you make a single calendar, the width available will be less. If you make double calendar, the width available will be much better if we make it very strategically. We have seen the calendar spread payoff diagram. There is a profit tent, and if that profit tent is breached, there are two break-even points. If the profit tent is breached, obviously we require to do some adjustments, because this is not a zero risk strategy. This can give a decent loss also, so we must be very, very carefully watching the calendar spreads during the market. Overall goal is to make more than 1.5% on capital deployed. It may take 4 days, it may take 30 days, it may take whole 40 days also. And very, very important, close the trade as soon as your profit target is achieved. Many times it happens that okay, we achieve our profit target very early in the series, but then we say still a lot of time is available, let me sit through and try to take more profit. That is the dangerous path. In that only we are going to end up sometimes in loss, sometimes in better profit also. But let us be very, very disciplined. 1.5%, 2%, if you're getting it, even if it's third, fourth day of the deployment of the strategy, we should definitely book our profit. So to make things more clear, what I will do a back testing in which we will follow both the rules, that okay, whether we are getting 50% of the premium or not, whether we are able to create a calendar spread 40 days or 35 days in advance or not, whether liquidity is available or not, and then we will do a back testing and we will see when the adjustment is required and what adjustment we have taken to keep the calendar spread healthy. Please like this video and subscribe to this channel, and let us move to stock mock for doing a back testing. Let us now try to understand how to set up the trade first. So my request to all of you, please sit with pen and paper so that if you have any questions, you can note down your questions, write it in the comment section. I will be more than happy to answer all those queries, right? So what we are doing, we are trying to do a July August calendar. Again, July we will be selling, August we will be buying. So we said 35 to 40 days to expiry. So what I have done, I have gone to June 23rd. If you can see my cursor, June 23rd. On June 23rd, I will try to do July August calendar. So I go to 31st July, whatever is the expiry, let's say 31st July. And to get better liquidity, what I do, I will shift it the timing by 1 hour. So it is now 10:16. So now I am at 31st July option chain. So what I will do, I will try to see where is the market, 24,860. What I will try to do, I will go to some round number, maybe OTM 25,500. If I see 25,500, it is having a premium of 201 rupees. Let us select this. We will sell this. Similarly, on downside, because we want to create call calendar as well as put calendar, both will be out of the money. I'll go and choose 24,500, which is again 300, 400 points below. So I'll sell this also. Now, if you see here, see my cursor. So on call side, I received 201 rupees. On put side, I received 258 rupees. So total, I have received somewhere close to 450, 460 rupees. Now I'll go to next month. 450 means it is 50% of 900. If my buying is less than 900, then it makes sense. If my buying is going to cost me more than 900, I will not trade. So 28th August I have chosen here on the left hand side, and again I will go to the same strike price. The call strike price is 25,500. So I go to 25,500. I will buy this, and put strike is 24,500, and I will go back and try to buy 24,500. Hopefully liquidity is there. I have purchased this. right? Let us hide this so that it becomes easier. Now if you see my buying, this is the buying 380 rupees plus 350 rupees. So 380 plus 350 is somewhere close to 750 rupees. So I received 450, I am paying 750. So whatever I have received, whatever I have sold is much more than 50 to 60% of whatever I am buying. So then definitely this trade makes sense. So what we will do, we will see how much margin is required. Margin required is 1.43 lakhs, and I will be very happy if I get somewhere close to 1.5 to 2% in this trade. This is June 23rd. What I have traded is I have traded for July and August. Let us now see straight away end of the day what has happened. I will do an adjustment if any of my call which is sold or purchased, if my sold call becomes in the money by more than 200 points, or if my sold put becomes in the money by more than 200 points, these are the two conditions when I will touch them. Or third scenario, in case the difference between sold call and sold put becomes too big, then we need to adjust. So as of now, the sold call is worth 201 rupees, sold put is worth 258 rupees. The difference is not very high. We can continue. Let us go to end of day. This kind of a trades you do not require to monitor very fast, because you have got a very good range, 24,265 to 26,007, which means around 1700 plus points range is there available with us. So let's go end of the day. End of the day, nothing much change in the market, and as of now the trade is not giving us any profit also. Let us now go next day. 30 minutes I will do. See my cursor here, 30 minutes. So next day when the markets opened, or at around 9:45, the trade is giving me already 0.3% profit. But do I need to do anything? No, I do not need to do anything. The trade is, you see, this payoff diagram is clearly telling you that okay, market is well within the range of my profitable zone, so no adjustment required. Let us see when the adjustment will be required, or if adjustment is not required and I am able to achieve my 1.5%, I will not do the adjustment. Again, I'll go to end of the day. Market is still within that profitable range. I am still making some 0.2% profit, which is okay. Again, I will do it by 30 minutes. Market is still within range. This is the beauty of slow calendars, monthly calendars. Slow calendars doesn't mean that okay, slow traders are doing it. Slow calendars means that okay, I want peace of mind. I want to trade it with lot of peace of mind and do not want to be on my toes, right? So 0.4% is the profit. I am not exiting because I still want much more than that, and I'll again go end of the day. So I am watching in first 30 minutes. I am watching in end of the day. I am not required to do any adjustments, so I am just continuing with the trade. As of now, we are only in June itself. The trade is for July and August. So we are 0.3% plus. If I say, has the market gone in any one direction? I will say no, it has not gone in any one direction. It is still well within the tent, because the tent in itself is pretty wide. Again, next day, I am making 0.4%. Has market gone outside my tent? I don't think so. It's still okay. I'm very much comfortable. Market is at 25,346, and my range is 25,917, which means 600 points. On downside, I'm having almost 800 points. So there is in fact 900 to almost 1000 points. So no issue. Let's say this end of day. This end of day, see, the market has made a big move. It is touching my call calendar. My call calendar is 25,500 and market is touching that. But again, we will not do anything, because we said as long as it doesn't go 200 points in the money, because I'm safe up to 25,917. So no worry. But yes, if you see, my put is just 82 rupees, my call is 442 rupees. This is not good. This is not good, because in case market goes up, my put calendar is not going to give me any protection, and my call calendar can become negative for me. As of now, I am still making 0.6%. If I am scared of this kind of a trade, I can exit 0.6% in, let us say, 4-5 days. And but let us learn the adjustment also. So what I will do, I will scare off this put calendar, because the price available for sold put is only 82 rupees, whereas the call is 442 rupees. So there is a huge disbalance. Now if you see, once I have squared off the put calendar, Obviously it's a very good call calendar, but I want a better range. So I will again go to option chain. I will create a put calendar which is on a higher side. So earlier put calendar is 24,500, market has crossed 25,500. Let me go and create something like 25,000, right? So I'll go to 31st July. This is what I need to sell, and 25,000 is good. 164 rupees, double than what we were having earlier. This I'm going to sell, and I'll go to 28th August. Why I am choosing the 500 strike? Because there will be better liquidity in that. We are still in June month and we are trading for July and August. So we need to take care of these things also. And I will buy this. Okay. Now I have a better calendar. My upper range has slightly increased. On put side also I have a decent amount of money. I am already 0.6% plus. In case my call calendar, which is at 25,500, gets breached by more than 150 or 200 points, let us say market close 25,700, somewhere here, then only I am going to touch my call side of the calendar. Otherwise I am continuing. So let's move ahead. 30 minutes. No, nothing has happened. I am making 0.8%, which is quite impressive. If you see, we have traded only for 3-4 days. Let's see, end of the day, market has moved up slightly. It has gone to 634, but still I am okay with that. Here now you need to take a very qualitative decision that okay, shall I adjust, shall I not adjust? You are always in a dilemma, obviously, but I will say, because I'm safe till 26,000 and market is still at 25,634, I still have decent 350 400 points. I'll take that chance. I will not adjust, because over adjustment kills the trade. As of now, I'm pretty much comfortable with the trade. uh, I'm already making 0.5%. I will not adjust. Let's move and see what happens next day. 30 minutes. Okay, market is still there and I'm making 0.6%. Everything is okay. Put is still having a lot of juice. Call is for it, but you see, even if the market has gone up, it is the call side which is giving us a lot of profit. Still well within our rules. We will not break the rules. Let us see end of the day. End of the day, market has gone down towards 500 again, which is good for us. Yes, so we are making 1%. So July month has not even started. We are already 1% plus in the trade. A conservative trader like me would definitely quit at 1.5%. Let us see. So what I am doing, I am just showing you start of the day, end of the day, start of the day, end of the day. Start of the day, next day is 1st July. Market has gone up a little because I can see that okay, it is just going out of the peak of upside peak of the calendar. But am I okay? I am pretty much okay. It is still not breaching my call calendar by 200 points. End of day, it is again coming back. So market is just hovering around 500 600 500 600. I am making 0.9%. My put is still having 128 rupees. So this definitely will be a slow decay because the month has just started. We have sold July options and we are on the first day of the July, right? Next day, 2nd July, again market there only. I'm making now 1.1% of the capital deployed, which is quite good. End of the day, let us see. End of the day, market has come down. I am still making 1%. It's not that okay, if I am entering the center of the calendar, things will be better. No, it all depends how weeks is behaving, how weeks of July is behaving, and accordingly the calendar is giving us some profit or increase in profit or reduction in profit. Next day, let us see. I'm waiting that do I need to do an adjustment? No. 3rd July 9:45, no adjustment, still okay. End of day, let us see. Oh, it is coming back in the center of the payoff diagram. Nothing to be done. Now I'm making 1.4%. Now this is a decision I must take that okay, I am at 1.4%. It is just beginning of the month. I have other setups now. I can trade in other setups to increase my profits. Not necessarily this setup has given its value, right? So I can close. That is one of the options. But just to learn, let us see, can we get slightly more which is the greed part now entering into the system. 30 minutes, okay, still there only, and market is very well within our calendar spread, nothing to worry. That is the benefit of long range candle. Let us say end of the day also nothing has changed, everything is same. Next day I am looking for an opportunity to adjust. No, not required. End of the day we will not force adjustments, nothing has happened. Is it working? Yes, it's working. Figures are changing, but I think market is very stable. Very stable. I'm again making 1.3%. Is it breaking calendar spread on call side by 200 points? I don't think so. Next day, let us see. Okay, now I'm making 1.7% and I will not stop here. I will definitely do not like to extend it further because I'm making 1.7%. My target was 1.5%. I am just on the first 9 days of the month. I still have a lot of opportunities. I can now shift my gear to a faster calendar or maybe to another calendar. Let us see end of day if I can get better. Yes, 1.9%. So this is where we should definitely close this trade, because now from here onwards it can be much more profitable. Don't see this that okay, 11% profit is available and we are just taking around 2% and exiting. No, that should not be the scenario. What we should do, that should not be the thought process. So what we should be doing that okay, every time if I'm able to get 2% and for next, let's say, 15 days or so. So next cycle will start maybe 23rd, 24th of July for August, September. So next 15, 16 days, I can definitely see into other setups which can fetch me another 1 or 2%. So this is very important. You should not be forcing the trades. You should not be sitting in the trades till end. Just make your profit and get out of the trade. So hopefully you must have understood how these setups can be played very smartly, right? Just for you can say knowledge sake, let us see 30 minutes. Another day if I have kept it, it is giving me 2.1%, but I am not going to keep it in any case beyond this. This is perfectly good exit for me. This is very important to exit the checker view when you are already winning. Do not wait that okay, I want everything. No, that is not possible. You have to leave a lot of things on the table. That is the basic principle of options trading. That's it. Hopefully you must have liked the video. Please click on the like button. Also, there can be many such setups in calendar spreads. We have covered just one of them, which required least intervention. Do subscribe to the channel. If you have already not subscribed, press the bell icon also, so that whenever we are posting a video, you will get a notification. There is a link given in the description for the Option School app, and you can see a lot of courses in the app also. See you in the next video. Thank you.